Hello friends, suddenly on Thursday, give or take a few minutes, around 2 p.m., something happened to fire up the markets and the Nifty went up almost 500 points from the day's low. And the Bank Nifty, of course, tried to keep pace with it, and the entire week's gain came from what happened on Thursday alone. Now, was it anticipated? Could it have been predicted? What caused it? Because the cause and effect theory is what determines our understanding of anything at all. Now, first things first, do remember in this video at the beginning of the calendar year, I had told you that the year 2024 is a very special year. I backed it up with articles on money control and in my live mint column that my live mint column is India's first and only media column to offer statistical inputs to its readers. It's one of its kind. It's free to read. You don't need any subscription, and I always provide hyperlinks to my articles on Sunday night, failing which early Monday morning. I've been telling you in especially this video that 2024 is a special year because more than 5 dozen countries are going through elections, and in the pinned comment below and the description below this video, I've given you a list of all the countries that have had or are going to have elections in 2024. The biggest being USA on 5th of November 2024. Now, economic data would be gravy dressed. Promises of reform, tall promises, etc. You know the drill. That would give a feel-good factor to the global financial markets, and markets would more or less remain bullish in 2024. And I also told you in my columns and videos that high volatility as a permanent feature in the marketplace is here to stay. Here is what I said. So as we head towards a pro-cyclical market, individual stock futures volatility may not be restricted, or intraday ranges may not be restricted to 3.25% to 3.5%. 4% might just become the norm. Then on Wednesday evening, a couple of minutes before 8 p.m., I put up a post on my Telegram channel and our WhatsApp channel. The links to these are in the pinned comment and description below this video. Also on my text messages on the YouTube channel that you are watching, that disinformation protocol meaning there would be a smoke screen in the market that would basically fool an average retail trader to take the wrong side of the market. On Wednesday evening, I posted that message, and Thursday after 2 p.m. or around 2 p.m. India time, our markets zoomed forward. Now that message is available to you. You can use the hyperlink below this video to read those messages. Now the Fed is meeting this week to consider interest rate cuts in its FOMC meeting. Will these rate cuts trigger a bull market in global financial markets? That is what we will be discussing in this video. But before I go any further, please also read the post that I put up on the YouTube text, Telegram channel and the WhatsApp channel about what I feel could possibly happen to coupon rates, which is interest rates. Friends, I now come to the Bank Nifty, which has risen on 4 out of 5 trading sessions. And as you can see on the daily chart on your screen, this index has gained 2.69% and closed above its month-long moving average, which itself is turning marginally higher. That means this short-term outlook is positive for now. The price has also broken out and closed above the bullish wedge top. I've basically been telling you that you cannot have a sustainable rally in the markets without banking stocks rising because of the sheer 34% weightage in the Nifty of the banking space. Now let's take a look at the weekly chart, and what you are seeing is a very, very noticeable phenomena. Last week we saw a very large power candle which was a bullish engulfing pattern, and the week prior was a bearish engulfing pattern. So look at the kind of volatility that has basically been seen in the market. There's been a sea change in sentiments because expectations from bearishness to bullishness did not take too long to occur. The price itself is above its 25-week exponential moving average, which is a 6-month long holding on cost of an average investor. So the medium-term outlook is positive for now. Friends, in the week before last, this index was number 7 on the most volatile counters list as per statistical beta rankings I maintain in-house. It rose up by 2 notches to number 5, which means the challenge level went up marginally. Last week, I advocated an estimated range between 52,000 on the upside and 49,150 on the downside. Note, the high was 51,994, which is a mere 6 points away from I estimated resistance point. That is our statistical trading model IBEX at work for you. In the coming week, I estimate a range between 53,500 on the upside and 50,350 on the downside. Friends, in addition to these levels, please also monitor our daily, weekly and monthly pivots that we update on our Telegram and WhatsApp channels, and that will help you laser precise your entry and exits in futures and options. Friends, I now come to the Nifty 50, which gained 2.03%. And as you can see on the daily chart on your screen, the index went up on 3 out of 5 trading sessions. Price is above its month-long moving average, which itself is rising unmistakably, which means the short-term outlook is positive for now. The Nifty has clocked a lifetime high last week, and unlike the Bank Nifty, which has not yet reached a fresh high, the Nifty is clearly outperforming the Bank Nifty. Going to the weekly chart, what you are basically seeing is a repeat of the Bank Nifty story, a bullish engulfing pattern last week with a very large candle compared to the prior week's bearish engulfing pattern. The first thing that you realize when you see this chart is a megaphone formation. Megaphone are two trend lines that are diverging away from each other, which means the range is expanding. Remember what I showed you as a clip from a prior video at the beginning of this video. Volatility is going to go up. Now, gone are the days when 2 standard deviations was the norm. You are basically seeing 3, 3.5, sometimes even 4 standard deviations in volatility. That is something you'll have to learn to live by. Now, the price is above its 6-month moving average, which is a 25-week moving average. So the medium-term outlook is positive for now. But the differential between the price and the moving average is significant, which means some consolidation, maybe even a small correction, is an open possibility. Friends, in the week before last, this index was number 16 on the most volatile counters list as per statistical beta rankings in-house. It jumped 7 notches to number 9. Now that tells you that volatility has indeed jumped up a lot, and so has the challenge level for a retail trader. Last week, I estimated a range between 25,425 on the upside and 24,300 on the downside, which held perfectly well. In the coming week, I estimate a range between 25,950 on the upside and 24,750 on the downside. Please also watch our daily, weekly and monthly pivots on our Telegram channel and WhatsApp channel. Friends, I now come to my strategy for the week ahead. It remains unchanged. I will continue to focus on public sector units, and within the public sector unit space, I will specifically target oil marketing companies, energy, power transmission, power distribution, public sector banks, defense stocks, because these segments will give me two-way price move, bullish and bearish. Do remember, in the week ahead, we have a major trigger. The US Fed is meeting to determine interest rate cuts. So markets might thrash about a lot. Now, I will continue to have a small footprint. That means trade small, because of the video I shared with you earlier as to how even with a small exposure, it is possible to make bigger returns. My strategy to bet on theta decay on interest rate sensitives remains in place. And as far as commodity space is concerned, similar theta decay strategies in energy commodities, which are showing a natural progression in line with weather-related cyclical price moves that I have talked about in the past. Now, more and more will be shared on my Telegram and WhatsApp channels as and when the Fed interest rate decision crystallizes. Now, Bullion bulls, I have been very, very bullish on Bullion. I have recorded a couple of videos which you can check out here. Bullion bulls should hold on to their long positions. Just ignore the short-term volatility and even declines, if any, till the US elections are held on 5th of November 2024. If you want to make even more money in Bullion than you already have after watching my video a couple of months ago, I think you should look beyond 2024, possibly even beyond 2025. My expectations on pro-cyclicality in the markets remains in place. You have videos up here to gauge what pro-cyclicality is and how you must trade these markets if and when they finally come. Now, like I said, we'll take a fresh look at the interest rate decision when we get the data from the US Fed. Before I wind up this video, a reminder to subscribe to my YouTube channel. If you haven't already done so, click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment segment, do let me know how my videos help you and how I can help you in the future as well by recording videos on particular topics of your choice. And a request here, please share my videos with smart guys like yourselves across your social media groups and friends and family lists, etc. so I can help a bigger audience to trade better. Thank you for your patience in being with me in this video. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Have a very profitable week ahead. Take care. Bye-bye.